Good morning, friends. Welcome to the point. I hope all of you are staying fit and fine and are in their homes, not moving out much. So, starting with the topic for the day, which is tax havens. Now, if you note, it is not heavens, it is havens. So, you just keep a note of the spelling, which is written here. So, what is the first slide about? It talks about what tax havens are. A tax haven or offshore financial center is any country or jurisdiction that offers minimal tax liability to foreign individuals and businesses. So, tax havens are a country or an island or a particular jurisdiction in any country that offers minimal tax liability. So, the tax rate that is charged in tax havens to the business houses that are open there or the individuals transferring their money into tax havens is very low, or sometimes it is even 0%. Tax havens do not require businesses to operate out of their country or the individuals to reside in their country to receive tax benefits. So in order to receive tax benefits of the jurisdiction of tax havens, you actually don't need to settle down there or to reside or to take the citizenship of that country. All you need to do is you just have to divert or reroute your money through tax havens, or say incorporate your company over there. For an example, you are living in India and a citizen of India and you want to open a company. Now, if you compare the tax rates in India, that is corporate tax, that ranges between 20 to 30%. Now, if there is a tax haven offering you a corporate tax rate of, let's say, 3%, you would definitely be inclined to open your business in such a jurisdiction. For an example, if I take an example of British Islands, which is a tax haven itself. So now what you do is you route your money to British Islands by some or the other means. Now open a company by the name of ABC Limited in British Islands, and then open a subsidiary of ABC Limited in India, doing all the production and distribution work. Now when the company starts, when the factory or the unit in India starts earning profit, now you're plowing back the profits to ABC Limited in British Islands, because this is your holding company and this was just a subsidiary, and you will now pay the tax rate at the rate of 3% and not as 20%, which is prevailing in India. So by this, what you are doing, you are saving the money paid as taxes to the government. So these are the benefits that the tax havens offer to the individuals and the business houses. In order to avail the benefits of tax haven, one just needs to be registered or incorporated in that jurisdiction. As I told, all you need to do is open or just get registered or incorporated in the jurisdiction of tax havens. Tax havens also typically limit public disclosure about the companies and their owners, because information is hard to extract. Tax havens are sometimes also called as secrecy jurisdiction. So if you know that many people from the world divert their money to the Swiss banks, and the reason why they divert is that the Switzerland government and the banks operating in Switzerland do not easily give the information about the account holders in their banks to the government of other countries. Let's suppose Indian government want to extract any information about the account holder by the name of so and so. So it will approach the Switzerland government, and the Switzerland government would not provide the information so easily as the Indian banks would do. So by this virtue, many people are attracted to deposit their money, which is more of illegitimate money, in accounts of banks in Switzerland. So is with the case of tax haven. The government of the tax haven usually don't provide the information about who is owning the company, or from where the funds are being flowing in, or where are they being diverted to. So because they maintain the utmost secrecy, they are often called as secrecy jurisdiction. Moving on to the next slide, the criteria for tax havens. OECD, which is Organization for Economic Cooperation and Development, has given certain criteria to acknowledge a jurisdiction as tax havens. So let us just go through them quickly. So first one is no or nominal tax rate. So if you see the tax rate prevailing in the tax haven, it is 0%, or it is very minimal, ranging between 2 to 10% at max. Lack of effective exchange of information. Yes, as I told you, the government do not easily provide the financial or any other information related to the individuals or companies incorporated there to the government which has approached them for the information. There's lack of transparency. So this the government from tax havens are least concerned about from where the money is inflowing or how much money is inflowing and whether the companies are filing their tax return or not. No, they are not interested. For an example, let's suppose government in India is definitely concerned about the FDIs flowing in the country. There is a limit to FDI in every sector, and after a certain limit you have to take permission from the government if the FDI exceeds a prescribed percentage. But as in the case of tax havens, no, they are not much worried about it. So there is not much of transparency that is maintained in the form of papers and accounts. So there is lack of transparency and there are no substantial activities. So yes, as I told you, you just need to incorporate the office or get it registered, and all the major activities that could be related to production, distribution, trading takes place in the domicile or the resident country. So there are no substantial activity taking place in the tax haven countries. Talking about the next slide, which talks about the benefits of tax haven. Now, what are the benefits of tax haven? If you think, then yes, there are many benefits for the person who wants to reroute its black money. Let's suppose I have a lot of black money. Now just don't think that I actually have it. It's just hypothetically I am telling you, and even if I have it, I will not be telling you, at least on this platform. So yeah, so my example was, let's suppose I have a lot of black money and I want to convert into white money or to start a business. Now if I directly open a business, I have to disclose the source of it in India. Now what I will do is I will transfer the money to tax havens where the government is least concerned about where the money is coming from. I will open an office over there. Now I will show this is the holding company and open a subsidiary in India. Now this company is investing the money in the subsidiary company, and now this black money which I transferred from India to this place is being diverted to the subsidiary incorporated in India. Now this black money, if you see, is being converted into white money. So as an individual or as a business house that I'm owning, I am having a lot of benefit that my money is getting converted without any problem from the government side. Also I am able to save a lot of tax because my holding company is in the British Island jurisdiction, and the tax rate over there is very low if I compare it to India, which is my country of domicile or residence. So for individuals or business, benefits by saving tax, which in tax haven countries may range from 0 to low single digit compared to high taxes in the country of citizenship or domicile. The other benefit is for the receiving country, that is the tax havens. So if the money flows in a country, a lot of development that takes place, I have to, let's suppose I have routed my money to the banks in tax havens, so that the banks over there are getting a lot of capital info flows, which they use it to extend loans to the people residing in the in their jurisdiction. So by this the development takes place in the tax haven countries. Tax haven countries benefit by way of attracting capital to their banks and financial institutions. By this way, they build a thriving financial sector, as in the case of Hong Kong and Singapore. How did this start? Why are they such a financial sector, or why there is a financial hub in these countries? Now Singapore is considered as a major financial center of the world. How they started like this, attracting big business houses by giving them very low tax rates. So a lot of companies opened their offices over there and gave employment to the local people, and this is how the countries turned into financial sectors of the world. So these are the two benefits of tax haven. Moving on to the next slide, which talks about the list of tax haven. This is not the complete list, but yes, some of the examples are there and you can just go through it. So starting with this British Virgin Islands, as I told you, Cayman Islands is there, Bermuda, Netherlands, which is a country in Europe. It's a very beautiful country. Switzerland, as we all know, Swiss banks, for which they are famous. Also, they are famous for the chocolates, but yes, more they are famous for their bank accounts. Do you also have a wish to open an account in some Swiss bank? Do let me know, yeah. Okay, moving on to Luxembourg. Again, it's in Europe. Hong Kong, as you all know. Jersey, Singapore, which is the financial sector of major financial hub of the world, and UAE. So this is the list of tax havens. So my dear friends, I hope it is clear to you what tax havens are about, how the money is diverted or rerouted through them, how do individuals or the business houses takes benefit of the low tax rates prevailing in the tax havens jurisdiction. So just go through the slides once again after the video is ended. Stay fit, stay at home, don't go out much. Please do wear masks and keep revising these concepts. So this is all for today's video, my friends. Thank you so much.